Buongiorno a tutti, oggi parliamo del FAM Euro Short Term, una strategia che investe principalmente in obbligazioni denominate in euro a breve scadenza, aggregando emissioni governative e societarie caratterizzate da un elevato livello di merito di credito. Passo la parola ad Ario, gestore delle strategie investment grade europee di Fidelity, per analizzare l'attuale contesto di mercato.
It has been a volatile several months for the market as investors try to assess the impact of potentially being in a higher for longer interest rate environment. From our perspective, it is unlikely for the European interest rates to remain at the current high levels for an extended period of time. This is because of two reasons. On the inflation front, the European inflation dynamic are much weaker than that in the US. Recent data has shown that the headline inflation is falling quickly and core inflation doesn't show sign of it being sticky. On the growth front, whilst the US growth has been pretty good, European growth has actually been very weak, and we think that it is quite likely for European growth to remain around zero for the next several quarters. As a result of this, the funds have two main positions implemented. On the duration side, we have a long duration bias with the overall duration of the fund of around 3 years, and relative duration of around +1 year. This is so that the funds can benefit when the ECB cuts rates at some point around middle of next year. We also have an overweight to the corporate bonds in the fund, such that the yield to maturity of the fund is around 5%. This is because whilst we think that European growth is not going to be great, it is also for it quite unlikely to fall into a deep and severe recession. As a result, given the elevated level of spreads, the current valuations look extremely attractive. We think now is a good time for investors to be invested in the Euro short-term bond fund because whilst over the last several months, the European fixed income market has been trading with a high level of correlation to the US one, we think that over the coming months and with more data coming and showing that the growth and inflation dynamic in Europe is very different to that in the US, the European fixed income can start to perform over the next several months.